Excellencies, distinguished panelists, our long-term partner, WIPA colleagues, ladies and gentlemen, first of all, thank you very much for participating in our annual Global Investment Conference, the Investment Promotion Conference. It's part of our satellite events of World Investment Forum of this year. And my presentation is on the global investment prospects and global value chain transformation beyond the pandemic. The next slide, please. Yes, the pandemic is a triple shock of supply, demand, and policy. It has a severe impact on global trade, investment, and the GDCs. As you are aware that the global GDP is projected to fall by 4% this year before growing by over 4% next year. And global trade is forecast for this year to decline by 9.2% according to WTO. That's on merchandise trade, and followed by 7% of rise next year. But as to global FDI, according to our UNCTAD forecast, Fdi flows will likely decrease by up to 40% this year from their 2019 value of $1.5 trillion. And this would bring FDI below 1 trillion for the first time since 2005. The global FDI is projected to decline by a further 5 to 10% in 2021, and a gradual rebound will only happen in 2022. So global FDI would show a kind of a U-shaped recovery, and this is unlike the forecast, as I mentioned earlier, for global GDP and the trade, which are projected to have a V-shaped recovery next year. And the outlook of trade, investment, and GVCs are highly uncertain. Prospects depends on duration of the global crisis and effectiveness of policy response. Geopolitical conflicts, financial crisis, financial risks, and the trade tensions will add uncertainty. The impact is severe everywhere, but varied by regions. Next slide. And yes, as the table shows, that FDI flows to developing economies are projected to decrease by 30 to 40%, while to developing economies will be hit harder by 35 to 45%. Transition economies expected to see a bigger fall. And those countries that rely more on investment in global value chain intensive and extractive industries will suffer the most. And for the first half of the year, as our Secretary General mentioned earlier, that global FDI declined by close to 50%. And in fact, developed economies suffer the most. FDI to developed economies as a whole declined by over 70%, while for developing economies, the decline was only 16%. But that was only first half of the year. And according to our forecast, based on indicators of greenfield investment announcement deals and the project financing deals, these are the kind of indicators for the near future FDI flows shows that developing countries suffer more perhaps in the second half of the year. So we'll see that as we are going to announce our further assessment of global FDI trends by the time of January next year. Now the next slide, please. For the costs of FDI flows or the impact of the pandemic on FDI, we see a number of transmission mechanisms. First, of course, FDI stuck in the lockdown. The slowdown of implementation of ongoing projects due to the closure of the sites and also the slowdown of the M&As and greenfield investment. And that's followed by a kind of a tightening of the margins of reinvested earnings, as we have seen the forecast from a large number of multinational companies. As you may be aware that the key component of FDI is reinvestment earnings. That counts for almost 50% worldwide of global FDI. There are many other factors, and due to the time constraint, I just move on. The next slide, please. Now, the pandemic, we take it as only a catalyst for the transformation of global value chains. If we look at a longer-term prospect, longer-term trends of global FDI and the GVCs, we observed that for the last 3 decades, the global value chain witnessed 2 decades of growth and 1 of stagnation. For the last decade, FDI already stagnated in growth and we also observed the slowdown of the growth of global value chain and value-added trade. And all these are, in fact, the phenomena of slowdown of globalization already happening before the global financial crisis. And that was basically driven by 3 mega trends. The first is the technology and the new industrial revolution, that advanced robotics and AI and digitalization of supply chain and additive manufacturing. All these make foreign investment asset light and light in foreign footprint. The policies and economic governance also impact on global FDI today and will impact on global FDI in the next 10 years. We observed that the more interventionist at the national policy levels. We also see the rising of protectionism in trade and investment, and more regional bilateral and ad hoc economic cooperations instead of a multilateral approach. Sustainability will be another driver for the future transformation of global value chains. We see the commitment worldwide for pursuing sustainable development goals. We see the sustainability policies and the regulations are putting in place by governments at the national and regional levels. We also observed the market-driven changes in products and processes along the global value chains. All these will be the drivers for the future transformation of the global value chain and in turn impact on the patterns of global FDI flows. Next slide, please. In our World Investment Report, we look at the different trajectories, basically 4 trajectories that will impact on the investment along the different industries. That is the transformation of the global value chain, international production. So the graph shows that we look into different industries, primary, manufacturing, and services, and have seen the impact. Next slide, please. 10 broad directions can be observed for the future transformation of the global value chain and the landscape of global FDI. First, there will be shorter and less fragmented value chains. Second, more concentrated value added. And the third, more platform-driven and asset-light value chain governance. That is, the ITC based multinational companies will replace the traditional multinational companies in leading the value chain. The fourth is a shift from global to regional and sub-regional value chains. So we'll see more regional value chains and less of global value chains. The fifth is the less global efficiency-seeking FDI, more regional market-seeking FDI. This is partly due to the shift from global to regional value chains. The sixth phenomenon will be a kind of downward pressure on trade in intermediate goods, but there will be less pressure on trade in final products. The seventh is the shift in some industries from large-scale investment to smaller distributed manufacturing. This is mainly driven by 3D printing and servitization of the manufacturing. And the eighth is the continued growth and fragmentation in service value chains. And the service share will continue to grow in the value along the value chain. And that is partly due to the servicification of the manufacturing. The ninth is the resilience and the national security concerns as key drivers of global value chain diversification. That's in light of the current global crisis, but also due to the escalation of geopolitics worldwide. And the 10th is the shift from GVC investment to cross-border investment in infrastructure, domestic services, as well as in green and blue economies driven by the sustainability imperative. So these are the 10 broad trends that will bring challenges and opportunities. For the challenges, impact of restructuring of international production configurations will lead to divestment, relocation, and investment diversion, and this will affect a number of developing countries and some of the developed economies. Second, the challenge is the shrinking pool of efficiency-seeking investment, and that will lead to a tougher competition for FDI along value chains. The third challenge is that the value capture in GVCs and the development based on vertical specialization will be increasingly difficult to attract for developing countries. The fourth is the diminishing return of infrastructure built for the world of GVCs, and particularly over the past years by a number of advanced developing countries. Having said that, there are also a number of opportunities. The opportunities arising from the attracting investments that are looking for diversified supply bases and building redundancy and resilience. There will be also opportunities for increasing local and regional market-seeking FDI and distributed manufacturing. Opportunities can also rise from the shorter value chains and more investment in final goods production with broader industrial capacity and clustering in a wider spread geographically. And the last, there's also opportunity for developed digital infrastructure and a platform enabling new applications and services and new GVC entrants. Next slide. All these call for a new framework of investment attraction. And for countries, particularly developing countries, they need to embark on a new investment development path and to be more diversified and to build clustering. And developing countries also need to build a new ecosystem in response to the 10 directions of the transformation of global value chains and the new landscape of global FDI. Countries also need to build dynamic, productive capacity at home, and clustering linkages are the most important elements in their new industrial policies. And last but not least is for our audience, investment promotion agencies, we need to formulate new investment promotion strategies for the decade ahead. UNCTAD stands ready to collaborate with investment promotion agencies and special economic zones worldwide to face with the new challenges and to capture new opportunities. Thank you.